Hey there, folks. How are ya? Welcome back to my channel. Okay, so I'm going to answer a question here about whether or not I think a home equity loan is a good way to finance renovations, and if there are any other alternatives as well. So I would say, generally speaking, yes. Let's talk about the difference between a home equity loan versus a home equity line of credit. A loan is usually you tapping, the remaining equity in your house, oftentimes called the second mortgage on the house. And it's designed just like a first mortgage where there's, a certain set period to pay it back, a fixed interest rate, and you have a predictable monthly payment for a period of time. A home equity line of credit is designed to work more kind of like a credit card. It's still utilizing the equity of your home as collateral, but it's kind of meant to draw money out and pay it back. It usually has a variable interest rate, which sometimes can go good. It can be good if rates go down. But if interest rates go up, your rate will go up. But you can essentially keep money drawn out on the home equity line of credit for as long as you like. Usually after 10 years, they'll cut it off and term it out for another 20 after that. Whereas the home equity loan probably would be 20 or 30 years. So I would say the distinction here is, do you think that you will want to pay the loan back sooner and then maintain the credit availability? If that were the case, I would go with the HELOC, because you could pay the HELOC down and then the loan still remains alive, and you could use that equity money for other purposes. If you think that really you just need to borrow this money, you're kind of increasing the value of the house, but you're also going to just pay it over 20 or 30 years and really not pay it down earlier, I would go with the home equity loan, sometimes called the HE loan, because you're going to have that fixed interest rate, you're going to have fixed payments, it's going to be very predictable, and you're going to have your first mortgage and that payment, and now your second mortgage or your HE loan and that payment, and that'll be your new combined payment. I don't mind financing renovations because they do increase the value of your house. So it's kind of like going in and buying a more expensive house, to a degree. Now, one last bit of information I'll throw out there is, you definitely would want to do a HELOC or a HE loan if you currently have a low interest rate first mortgage. And most likely you do, because if you own your house, you refinanced when rates were low in 2020, 2021, and you definitely want to keep that in place. So you do not want to do a full refi. However, if you happen to buy your home, I don't know, not too long ago, or for whatever reason you have a higher interest rate on your first loan, and you can go just refi the entire loan and take cash out for your renovation and end up with a total lower rate, you would want to investigate that option as well. So those are my thoughts on that. I hope you enjoy the renovation process of your home, and I hope it comes out just the way you want. See you in the next video.